no matter what's happening to Boeing, whether there be a door flying off over wherever it flew off, whether there's a plane crashing, whether there's a huge strike, it seems like investors don't, make the price move very drastically on the day of earnings, right? It just doesn't happen, which means this is perfect for our calendar spread play. So we've got, let me bring us back up to the present here. We've got earnings coming out on Tuesday morning before market open. So that means Monday we need to be ready. Monday as the market's coming to a close. Somewhere, 2:30 Eastern time, 2:30 New York City time, all the way up to 4 o'clock. We want to think about buying a calendar spread, right? And so which calendar spread do you buy? Well, you try to aim for the ones that are at the money, right? And so usually when you look at the options chain, and here we can pull up our options lookup tool that'll make this really easy. And this options lookup tool in its current form is still available to anybody who wants to get a free access to our premium selling site. So just go get free access. But let me go ahead and pull up the options lookup tool. And I'm going to pull up Boeing. And I'm going to pull up a few more strike prices. This is just using last night's data, so this is just for reference. And also, all of these recommendations, as you know, they're just communicating. They're not actual, go out and trade this. You got to do your own due diligence and make your own decisions and take your own responsibility for your investments. But with all that aside, you look at the back month option, and I'm probably thinking of the March one again, just like I did with United Airlines, and you can see that they're trading every $5 increments. And when you look at the near term options, you notice that, hey, they're trading every $2.50. In the case of the United Airlines, they were trading every $1. Your deciding factor in a calendar spread is going to be your back month. So make sure you pick, a strike price that's both available on the back month and the front month option. And, you go for the ones that are closest. If you think that there's some sort of directional bias, like for instance, you think that Boeing might slightly go up in price after earnings, then use calls. If you think it'll go slightly down, use puts. Maybe do a little bit of research over the weekend on that so you get a good feeling. If you're over 50% confident, go one way or the other. And same with, for instance, if the like for now, right now, Boeing is currently trading at 177.21. Well, you've got to trade 175 or 180, right? So which do you choose? Again, if you have a bias, choose 175 and use puts. If you have a bias to the top side, choose 180 and use puts. You really won't choose your strike price though, SIP, until it's Monday and you're actually, in there at 2:30 in the afternoon and you're looking at what's happening, and that's when you'll choose your strike price, you'll choose your bias, you'll choose, whether you use calls or puts. And if some people who are undecided, they'll do, one contract to the top side with calls and one contract to the bottom side with puts. However you want to play it, but Boeing is going to be my play for next week.